Mega billionaire, investing icon, money mentor, genius. Many lofty titles have been used to describe this unique individual who, with his Midas touch, has created a personal fortune of well over $42 billion, making him one of the 2 wealthiest individuals in the world. I'm Jeff Hall, and today we're going on a journey to uncover the man behind the myth. Who is this mysterious money man? It's none other than the investing genius known as the Oracle of Omaha, Warren Buffett. I had the privilege of spending time with the planet's best-known investment phenomenon, as well as with some of his friends, family, and colleagues to learn more about the man and some of his investing secrets to success.
Warren Buffett has achieved international fame and fortune with his uncanny ability to turn everything he touches into gold. Respected and admired by investors worldwide, his adoring fans hang on his every homespun word of wit and wisdom.
Anybody that buys into a business that does well over a 5 or 10 year period and they don't pay too much at the initial price, they're going to do well.
While many of the companies in which he has invested billions of dollars are recognizable names such as Coca-Cola, American Express, and Dairy Queen, little is known about the private life of this humble, unassuming man, or his secrets of success. Warren Buffett was born in Omaha, Nebraska on August the 30th, 1930, to Howard and Leela Buffett. Howard was a stockbroker who later became a congressman. Young Warren didn't appear to be following in his father's investing footsteps very early on. Instead, as a young boy, he worked with his Uncle Fred in the family grocery business, in which generations of Buffetts had been involved. However, it wasn't long before his keen business sense began to surface.
It all started right here in Omaha, and it started with Coca-Cola. He turned 25 cents into 30 cents, and the way he did that was to go out and buy a 6-pack of Coke from the Buffett & Son grocery store that his family ran, pays a quarter for the 6 Cokes, and then he comes back and he charges everybody a nickel. He makes 5 cents profit, and that's a 20% return, and that's what he's done his entire life. And that made him not a millionaire, but a multi-billionaire. To show the real genesis, here's a kid, 5 or 6, very early on. He gets in the Coke machine somehow. He pulls out the Pepsi tops and the Coke tops, and he goes, 1 Pepsi, 2 Coke, Coke's selling a little better. He's already thinking which one has the competitive position at the age very early. He's a child, and he's counting the tops of Pepsis and Cokes.
He had a paper route. He bought his first stocks with his sister when he was about 9, and his sister didn't really appreciate his choice when he made it, but later on, when they made money, she was happier with him. But it was a progression of events. He sort of grew.
At the age of 11, he gets with his sister, Doris, and says, I'm going in the stock market. And they get a couple $100 together, and they buy City Service Preferred, and the stock goes down. And the sister badgers him to death. Warren, when's it going up? Well, it didn't go up. It finally went up a little bit, went up about $5. He sold out, split it off with the sister. The stock doubles, triples, and goes on. And he said from that point on, I never listened to anybody else. And he really never has. He talks to a lot of people, but all these decisions are his.
Obviously started your investing career at a very young age as a young man. What were some of your favorite deals?
Yeah, well, no, I didn't start until I was 11, and I really kicked myself for wasting all that time ahead of time.
When Buffett's father Howard was elected to Congress in 1942, 11-year-old Warren and his family followed him to Washington, where young Warren Buffett's entrepreneurial spirit continued to flourish.
He had like multiple paper routes in apartment buildings, and he had this really wonderful system where he would get up at 4 a.m. and he'd have a route where he could do it really fast and drop these papers off. And you know, it was a management problem for him even at that age. And even when he was in college, he was a district manager for newspaper boys, and you know, he was really good at this.
One business is his pinball machine business. He goes into it with his friend Don Danley from Woodrow Wilson High School. They're 15 and 16 years old. They put in a little bit of money. They go back at the end of the day. $4 comes out into the change thing. I'm sure Buffett grabbed it up. He saw the $4 in there, and for him, this was, here comes almost no investment. Here comes $4, where every night they go in, they get a little bit more. They set up more barbershops, more pinball machines, and by gosh, they're in the pinball business.
he and a friend bought an antique car and rented it out, driving people to proms and so forth and to football games. He just viewed everything as an opportunity to make a little bit of money, and it taught him things. It was fun and gave him a lot of self-confidence. When he actually graduated from college and went to work for Ben Graham in Washington, he had already had a pile of, I forget exactly how many thousands of dollars, but he had his own savings account that he started investing.
Buffett journeyed to New York City to attend Columbia University and to confront his destiny. He was to meet the person who would have the most profound impact on his life, and to whose great teachings he attributes much of his incredible success. Professor Ben Graham, also known as the father of value investing, became his friend and mentor and instilled in him the fundamentals of wise investing.
He was my hero, and I was interested in anything that he would have been involved in, but it's the reason I always tell students to always hang around with people better than you are, because you will float upward a little bit, and if you hang around with people that behave worse than you, pretty soon you'll start sliding down the pole. I mean, it works that way. Does it ever?
Buffett's romantic life also began to blossom, and in 1952, he married Susie. In 1956, the Buffetts purchased their first home in Omaha for $31,500, where remarkably, he still lives to this very day, in typical modest Buffett style. Warren and Susie went on to produce 3 lovely children, Howard, Susan, and Peter. Though later separating and living apart since 1977, Warren and Susie remained very close friends until she passed away in 2004.
He's bigger than life to a lot of people in the business world, and as a father, he's never ever been overbearing. You know, he used to drive an old beat-up Volkswagen when I was in junior high school, and in fact, I used to be embarrassed when I get this at school sometimes. I can't we afford a better car? And you know, until he had to bring some business people in town and shuttle them around, you know, for lunch or something, he finally moved up to a Cadillac, which is a big improvement in my opinion. And so, you know, I mean, he's just, you know, he's more basic than the normal person would be, to be honest with you. The one thing that has always been fun is he's just got a tremendous sense of humor, and he's so witty, and there's so many I wish I could remember some for you, but the ones I'd remember would probably get me in trouble with him anyway. but you ought to ask my sister. She'll be better at that than I am. But I mean, he's a lot of fun, and in all circumstances, you know, he's always the one that is the one that can lighten up the party or get things going. And it may not seem that way, you know, when you see him. He may seem pretty serious, and he is serious when he needs to be. But he's a lot of fun.
Okay.
3 total.
Okay. You have a layaway planner.
Thank you.
His humor is one thing that stands out. I think that he can make people laugh anywhere he goes. And it's great, whether he's at the gas station filling up his gas tank or whether he's talking to some business guy from Tokyo, it doesn't matter. They're laughing.
And people call this work.
There's no mystery. I mean, you know, he is exactly what you see. And there's no time in my life that I've ever seen him behave any differently than what people really think he is. And so I think that probably intrigues some people.
He is a bright, ethical, entertaining person, and it's really cool to have all those, you know, you can have an ethical person that you admire, but they might be really boring. But you know, Buffett isn't boring. He's engaged. He has his own humor, and when Buffett likes a person, he's a very loyal friend.
He's not interested in material things. He's a thinker, a deep thinker. His lifestyle has never changed. The same house, the same clothes, the same car, the same friends, the same Berkshire Hathaway. Nothing about him changes. He grows, but he likes his old friends. He loves Omaha.
Join in. Omaha, dream of Omaha. Every day is a vacation. It really is. I mean, you know, I wouldn't, obviously I can do anything in the world I want. You know, I mean, and what I choose to do is jump out of bed every morning and get excited about the coming day, because it's an exciting day that I have day after day.
He's definitely not interested in material things. And is he interested in money? Yes, in that he would like to build it up just as high it can go, get all the money he can, to have a high platform so that he can have more influence on the world. Nobody's going to listen to Warren Buffett if he's running a creamery. But if he's got $30 billion in Berkshire, somebody's going to listen to him about corporate governments, how to do things right, how to make good investments, how not to make mistakes, how not to live a crazy lifestyle because you're suddenly a CEO, but to keep it humble and keep it low-key. And it doesn't have to be about spending the money. Buffett's about saving the money for charity or for future generations. You can do a lot of good.
I think, the values that have been passed down is that we need to use, the resources that are available to us to help out in whatever way we can. And, my grandfather's going to be, giving a lot of money away, and it's going to be going to good charities.
If you go out and just blow it on Vegas or something, that is not Buffett at all. I've never seen Buffett have some material thing that looked more than like he was a professor at a high school or something.
And everyone says this, it's so cliche, but it's just the money isn't the most important thing. It's spending time with your family and enjoying yourself and enjoying what you do, which my grandfather does, I'm sure, as you know. He enjoys every minute of what he does, and that is impressive. And I think, you don't need to live in a huge house and have a resort somewhere in an island in the tropics. And it's not necessary, because you can enjoy life without all that.
One of the attributes I respect most about Warren Buffett is his integrity and how natural it is to him. It's not something he goes around thinking about, is this an honest thing, is this a respectable thing to do. It's in him, it's integrated into his very character, his soul, and he just walks that way and is that way.
I'm doing what I love doing. I don't want to change anything, particularly my age.
Coming up next, we'll find out what this investment superstar looks for when investing and what some of his success strategies are, right here on Warren Buffett Money Master. We'll be right back. In 1962, Berkshire Hathaway was a struggling textile mill in Bedford, Massachusetts. With his gift of investment foresight, Warren Buffett saw its potential and bought stock for less than $8 a share. As the United States textile industry unraveled due to foreign competition, Buffett redirected Berkshire's capital into a variety of other businesses, including insurance, which turned out to be an incredible investment vehicle. This great cash-producing business enabled him to buy up many solid companies and stocks, and the rest, as they say, is history, as Berkshire Hathaway shares have now grown in value and garner the astronomical price of over $90,000 each share.
Warren Buffett is viewed not only as an icon in the world of investing, but as a pillar of integrity. He is regularly crowned the most admired business person in the world.
I went out of business in 1969. I folded a partnership because I couldn't find anything to buy in marketable securities. It was this multi-billion, trillion-dollar market, but I was managing money for people, and I couldn't figure out a way to invest $105 million intelligently. And I sent the money back.
He really had very little to start with. So what he did build, he built completely on his own. He did it in a way that's, again, fairly unique. I mean, he did it over time. He wasn't in a hurry. He wasn't greedy about it. He had a lot of patience and tolerance. He was smart about it. But he's not somebody who set out to get rich either.
Warren Buffett is a unique phenomenon in the world, and he is recognized globally as a uniquely American business model.
His impressive track record of outstanding performance on behalf of his shareholders has earned him both acclaim and envy around the world. Over the past 39 years, Buffett has returned on average over 22% per year to investors through his holding company, Berkshire Hathaway, a multi-billion-dollar powerhouse consisting of both wholly owned private businesses and publicly traded stocks and investments.
He's amassed this incredible company, this amazing group of subsidiaries that really have little to do with one another. You know, we're all so very, very diverse, and yet he's built a very successful empire.
Borsheim's is one of the most successful jewelry stores in the United States, and when billionaire and friend Bill Gates came in to buy an engagement ring for his fiancée, Buffett advised him to keep in mind the accepted formula and the one he used when buying Susie her engagement ring. His advice? Make sure you spend at least 3 months' income.
Buffett's empire encompasses a broad spectrum of businesses, including large investments in a select group of public stocks, many of which are household names. Buffett prefers to buy companies in their entirety whenever possible, enabling them to flourish under the Berkshire Hathaway umbrella. The companies that he has bought outright are very diverse and include a vast array of industries.
Buffett says his strategy is simple. To invest successfully over a lifetime does not require a stratospheric IQ, unusual business insight, or inside information. What's needed is a sound intellectual framework for decisions and the ability to keep emotions from corroding that framework.
It's more temperament than IQ. You have to have the right ability to sort of get detached from day-to-day things. And it doesn't require 150 IQ at all. It just requires a certain soundness. And it's like buying a farm or an apartment house or anything else. You look at the asset, you decide whether you want to own it for 10 or 20 years in terms of its income-producing ability. That doesn't mean it has to pay dividends, but it has to generate income that it uses intelligently within the business. You want to be in with managers that you trust and that are able. And it's not a complicated process. People make it a lot more complicated than it is. They think of stocks as something that or maybe go up next week or next month or wiggle around or move on charts and all that sort of thing. And they don't think about stocks as just being a piece of a business. If they think about them as a piece of a business, a lot will flow from that will enable them to make more intelligent decisions. Now, stocks get offered to us every day, 10 trillion or so market value of stocks in the U.S. market. So it's an easy policy to implement when price is right on stocks. Businesses are opportunistic. The phone rings occasionally, and it may be a $500 million deal or maybe a $3 billion deal. So they're two different games in that sense.
And it's the cash flow generated from his many diverse businesses that allows Buffett to selectively acquire many more quality companies to add to the Berkshire Hathaway empire.
Well, I look for a company that has a durable competitive advantage, basically. I mean, those are hard to find. But and I look for ones that I understand. Now, there may be all kinds of companies out there that have that advantage, but I don't understand them myself. You've got to stay within what I call your circle of competence. And maybe I understand chewing gum, or I understand shaving, or soft drinks or something, and I don't understand high tech. Doesn't mean I don't understand what they do, but I don't understand where those companies are going to be in 10 years or 15 years. And that's what investing is all about.
If you could find those businesses at great prices, if they were well managed, if they delivered high returns on capital, they were going to be outstanding investments.
I think it's very much his ability to look at the markets, to look at the businesses, especially the businesses that he's amassed, to see their longevity, to see the fact that he sees businesses that long-term into the future he believes have great viability and great sustainability.
What Warren is always trying to do is reduce his chances of losses to near zero. Warren was one of these people who figured out a long time ago that the great money is not made by taking great risks. It's made by minimizing the risks.
We look for businesses we understand. That's number one. We look for businesses with long-term, decent economic characteristics, some kind of durable competitive advantage. We look for a management we admire and trust, and we look for a price we like. And when we find those, we buy.
Buffett has chosen his mentors carefully over the years and also likes to study the strategies and ideas of outstanding individuals with skill and character beyond the investing arena. Buffett is a baseball fan and owns the local baseball team in Omaha, the Omaha Royals. Many years ago, he was influenced by baseball legend Ted Williams, the last man to bat a .400 average in professional baseball. Buffett found a diagram of the strike zone that Williams had devised with 77 fields within the strike zone, 3.5 of which were gold. Williams discovered if he just waited for the ideal pitch, one that would enter just those 3.5 of the 77 spots to swing at, he would be guaranteed to bat at least .400. Buffett translated that to the investing world. He knew that if he just patiently waited for the ideal business or stock to buy, he would hit an investing home run. And unlike baseball, with investing, you don't get just 4 balls and 3 strikes. The stock market offers up thousands of pitches a day and unlimited time to swing. Buffett has mastered the art of waiting for the slow, easy pitch to guarantee his investing home run record.
He is going to look at the things that can go wrong with a company first and then just screen those out, and he's able to do this very rapidly. The great money is made by buying great companies at very low prices and extending your holding period indefinitely. The ones that can tie their long-term growth to stubborn, inexorable growth in demographics in this country, that there was going to be this constant growing need for that product. His initial instinct is always to be defensive. We always think of Warren as a great stock picker. I like to say he's a great stock avoider.
It is often Buffett's ability to identify the investments to avoid that protects Berkshire Hathaway shareholders from experiencing common investing disasters, such as the technology stock meltdown that occurred in the early part of the new millennium. In the late 90s, when technology and telecom stocks boomed, Buffett's approach seemed old-fashioned as he stuck with traditional businesses like insurance and ice cream and avoided high-flying internet and telecom stocks. Many media pundits reported that Buffett had been left behind and had lost his Midas touch. Meanwhile, millions of investors were obsessed with the allure of quick riches in tech stocks, buying anything they could get their hands on. They invested in companies involved in computers, fiber optics, satellites, computer chips, and of course, what appeared to be the mother lode, the internet. But Buffett was not lured by the promise of a quick profit. He refused to be tempted by the apparent gold mine offered by new economy companies. Though unpopular at the time, he stood firm with his traditional approach, remaining focused on old economy-style investments. Buffett was ultimately vindicated as many technology investments began a meltdown at the beginning of the new millennium, when many dot-coms quickly became dot-bombs and ultimately dot-gons.
When prices go crazy, sooner or later there's an aftermath to it.
He had again emerged victorious to the delight and ultimate benefit of his shareholders.
Stay with us as we hear more advice from the investment icon right here on Warren Buffett Money Master. Warren Buffett certainly has incredible foresight and even, it seems, the magic touch. However, it hasn't always been a bed of roses. There was a dark moment in his history when one of the companies he had invested money in, Solomon, was tainted by scandal.
When they merged Fibro into Solomon, they never could quite get the book straight. One had trade days, one had settlement days, a few things. 11 years later, they still didn't have it, and the number floated around. And we'd been directors of the company for 4 years at that time and never heard a word about it. Never heard a word.
The fallout was difficult for Buffett, and he even had to speak before Congress on his mission to salvage Solomon. He put his reputation on the line and, as always, landed on his feet and was able to clear his name while correcting the problems discovered within Solomon. He continued doing business the only way he knew how, honestly and ethically.
It was during his trip to Congress that Buffett uttered the now famous line, "If you lose money for the firm by bad decisions, I'll be very understanding. If you lose reputation for the firm, I will be ruthless." Buffett repaired Solomon and did what was needed to clean house and restore the faith in the company and save the jobs of 8,000 employees. Buffett and his investors went on to thrive, and the Oracle of Omaha continued on his proven path to success.
One of the amazing things about Warren Buffett is often people think of him as the world's greatest investor, when in fact he's one of the world's greatest managers. And he's also thought of as a value investor when he is a values manager, looking for ethical, hardworking, and passionate CEOs running outstanding businesses.
His team of managers gets such outstanding treatment from Buffett that he has never had one of them go to a competing company. They leave only through death or retirement.
We have a sensational class of managers, and really everything flows from them.
Whereas the typical CEO in society is on the job for approximately 6 years, the average tenure for CEOs at any of Buffett's companies is 23 years and counting, because there's no retirement age at Berkshire Hathaway or at any of Warren Buffett's companies. Buffett has never managed a subsidiary company he's invested in. He's never taken over the keys of any business. He simply allows the business to continue thriving under the management he respects and admires. The reason he bought the company in the first place is because he liked it just the way it was.
He writes a letter to his managers every year, and he begins the letter with the very same sentence each year, saying to his all-star managers, "We can afford to lose money. In fact, we can afford to lose a lot of money, but we can never afford to lose our reputation."
He created an owner's manual to help investors better understand Berkshire Hathaway as an investment before they purchase it, and 14 clear principles that as a shareholder, if you read them and you don't agree with them, even one of them, then this is not an investment for you. The fact that he doesn't split his stock also encourages shareholders who tend to think longer term as owners, not think short term like traders or speculators. Buffett cherishes long-term participants, not gamblers or fad followers.
Once asked what his biggest nightmare would be, Buffett surprised everyone by not mentioning an insurance calamity or mass resignation from his CEOs, instead stating that his greatest nightmare would be attracting the wrong shareholder. Almost every other CEO in society is trying to attract shareholders. What makes Buffett different is that he's committed to keeping the shareholders he already has. In fact, Buffett's success in retaining his investing shareholders is unmatched in the investment community. Over 97% of investors who begin each year as a Berkshire Hathaway shareholder remain.
While the average shareholder on the technology-focused NASDAQ market has an investing time horizon of just 6 months, and on the New York Stock Exchange, the average shareholder has been around for just 13 months, the average Berkshire Hathaway investor and shareholder has been around for 27 years and counting, an extraordinary record.
This is truly impressive when you consider that Buffett shares are currently worth in excess of $90,000 each. Even more impressively, his annual meeting draws well over 15,000 devotees and is the most attended shareholders meeting in the world.
Welcome to Berkshire Hathaway's annual meeting, commonly referred to as Woodstock for capitalists.
Buffett shares his wit and wisdom with his adoring fans. Everyone from professional money managers and corporate executives to regular folks who have made the annual pilgrimage, hoping to get a nugget of information to aid them on their much-desired path to prosperity. The Buffett faithful have invested not only in Buffett's company, but in his investment philosophy. Shareholders devour it, waiting patiently in long lines just to share a hot dog, get his autograph, or even a hug from the Oracle of Omaha himself. The fact that even business owners who have sold their cherished businesses to Buffett speak highly of him is a testament to the man's character and sense of fair play.
After being at these annual meetings, I knew he was a totally approachable person. You know, Warren Buffett's like anybody else, except maybe a little nicer. You know, I mean, he's as good as they get. Obviously, they love his charm, they love his sense of humor, and they love his success for his investors. But I think his integrity is what really molds people to this cult he's got going.
It was just amazing how many people showed up. But they come because I think they think they're going to hear straight talk. They think that he cares about them. But I think they also come because in the financial world, as investors, sometimes you feel very distant and removed from your investments, from your stock holdings. I mean, how can you cozy up to a T-bill? But when you come to the Berkshire Hathaway annual meeting, you have a sense of community in the financial world, in the investment world. And it's comforting to know that there are real people out there handling your money.
The annual Berkshire Hathaway shareholders meeting, held in Omaha, Nebraska, is an incredible boon to the businesses there, and even Buffett's local companies reap the benefits.
Yesterday, the Furniture Mart had the biggest day in its history, and the 3 days so far, plus 23%, plus 13%, plus 46%. Yesterday, $4.7 million of business at the Furniture Mart. There are a lot of furniture stores do $4.7 million in a year, you know, and and we'll do more next year. But we couldn't be more pleased.
He is as hands-on or hands-off as you want him to be. He truly sends all of his managers a letter at the beginning of the year telling us, what the expectations are for the year. It's a one-page document. It's very short, it's very funny, it's very witty in his usual style. But truly what it is, it's the honor of working for a man that is held in such high esteem by everybody in the business community, and who has been just an amazing, amazing man of great integrity, who has built the most amazing company in the world.
Warren Buffett is an inspiration and role model for investors and business people alike, a real-life money mentor. Buffett's knowledge is often sought by world leaders and even fellow CEOs and billionaires, like friend Bill Gates, who now sits on the board of Buffett's Berkshire Hathaway.
We usually bet $1 when we bet each other on things, so...
With his willingness to share his insights, combined with his modest lifestyle and homespun humor, he is liked and respected by almost everyone he meets. He sets a great example of dedication to excellence and looks for the same in others.
Okay, good luck to you. Thanks. I look for people with a passion for the business. I mean, if you love the business, and you've got some ability, it's going to work. And when we buy businesses, we look for, they usually come with managers, and we're looking for managers that really just plain love their business. And even though they have a lot of money, they want to jump out of bed in the morning and run their business. And we find them, fortunately.
I think the fact that he's had the success that he has had in business, and he's never let that interfere with the kind of person he is or with his values or principles. In fact, I think the success has strengthened his values and principles because he's become a mentor to some people and an example to others, and he's well aware of that. And so I think the fact that he's just been a very solid, basic individual that has not strayed from his roots. I mean, and he hasn't let the success have that kind of influence on him.
Coming up next, some more investment insights from Warren Buffett, Money Master. We'll be back in a moment. Hi, I'm Jeff Hull. Now is an important time to support international charities as well as local charities making a difference in your own community. Please give generously to organizations that help those that cannot help themselves. Thank you.
Another very important person to Buffett, and someone who has had tremendous influence on his life and investing strategies, is his old friend and business partner, Charlie Munger. Lifelong friends, their great friendship has lasted through the years due to its foundation of mutual trust, respect, admiration, and a shared sense of humor.
There we go.
Thank you very much.
You get 10 autographs from me and trade it for one of Charlie's. Okay. I started worrying about Charlie's hearing a couple of years ago, and I hated to confront him with it. I mean, I just saw more and more evidence he was having problems. So I went to a doctor. And I said, this guy's my pal. I don't want to embarrass him. I said, what should I do? I think he's losing his hearing. And the doctor said, well, just stand across the room from him and tell him something in normal voice. See how he responds. So the next time we got together, I stood across the room. I said, Charlie, I think General Motors is pretty attractive at 42. Do you think we should buy some? No response. I moved halfway across the room and I said, Charlie, I think General Motors is pretty attractive at 42. Should we buy some? Not a word. Stand right on top of him. Charlie, I think General Motors is attractive at 42. Do you think we should buy some? And he said, for the third time, yes. So go to it, Charlie.
I once made the mistake of saying that Charlie was the smartest guy I know, and I got a phone call from my dad, so I've revised that. I think, my dad's the smartest guy I know, but...
I can say something, too, about our board that Warren can't. The Buffetts on our board, other than Warren, are very intelligent and very high-grade people.
I think maybe you could rephrase that sentence, Charlie. Okay, let's go to the next question. I don't want to let him loose any longer.
When asked once if he would ever write a book, Buffett simply said, Everything that needs to be known about investing has already been written. It's out there. It's just up to you and I to choose them and to follow them. It's simple, but as Charlie Munger says, it's not easy.
Buffett's simple yet profound philosophy has enabled many of his devotees to become very wealthy. His practical advice is you buy shares in a great business for an attractive price, which is less than the business is intrinsically worth, run by honest and competent management with a passion for the business, and Buffett's favorite holding period for that investment? Forever.
When Charlie and I would find something cheap enough go back earlier in our history where we could have put 100% of our net worth in one stock, we might well, if we found something we thought was extraordinarily cheap and where we didn't distrust the people running the place and all that, you would have found us. We would have probably put 100% of our net worth in, wouldn't we, Charlie?
I did it several times.
Yeah.
Too many investors get seduced by media headlines and flip from investment to investment. To Buffett, this is a major investing mistake.
When I talk to college students, that if they got a card when they graduated, that had 20 punches on it, and those were all the investment decisions they were going to get to make in their life, they get very rich because they think very hard about each one, and 20 is far more than you need to get very rich. You have to treat every punch as if it's important, and if you wait till you cross that threshold of extreme distortions between price and value, you need very few ideas in a lifetime. The world doesn't change that much. I mean, if you've been around for 50 years, and you learn about one company a week, that's 2,600 companies in 50 years. So it's not that hard.
His eagerly anticipated and entertaining annual reports are famous among the investment community and his admirers, as much for his wit as for his business insights, and have even won awards.
The ideal annual report from my standpoint would be on page 1 to say, this is the biggest problem we face, and then write a little 400-word essay on it. In our case, it might be 400 pages, but 400-word essay on it. And, that's what I want to know from the guy. I want to know what his nightmares are, about his business, or the toughest competitor I face is blank, Here's what we're doing to narrow the gap. But last year it widened. I mean, if he tells me the gap widened, from that, I'll keep reading.
From the standpoint of being a son, the thing that I admire the most is how he's been able to convey his ideas and principles and values to me, and how to apply them, and help me learn how to apply them in my life and what I've done and what I do in the future. And he comes from, the standpoint of just a very principled individual, and I think as he's gone on in life, he's gotten more principled. I mean, I think he's seen the value of that. He would have been in an early age, very aware of it, but I think he also has learned that he can influence people more by showing them by example as much as anything. What they can do in their life and what they don't want to do in their life. So I think he's had a huge influence on me that way, and on our kids.
Reputation is so important to Warren Buffett that he says it takes a lifetime to develop a reputation and only 5 minutes to ruin it.
Well, it's like saying that you got to have water if you're human. Without integrity, commerce doesn't work very well.
Stay tuned as we learn more about the personal opinions of Warren Buffett, Money Master, coming up next. Not only is he incredibly wealthy, successful, and universally well-liked, Buffett has a well-developed sense of corporate responsibility and often leads and inspires by example.
The word transparency, become very popular. I mean, it's honesty, really, when you get right down to it. And a management has an obligation, in my view, regardless of GAAP accounting rules, to try as clearly to explain to 1 million shareholders of theirs as they would if they had a single partner what the reality of business results and what the reality of their financial condition is. And sometimes GAAP accounting doesn't do a very good job of that, but there's still the English language, and the managements can do that job if they wish to.
Buffett also has some words of wisdom about globalization and trade relations.
Trade is good. I mean, the more we trade with other people, the better. They're getting something they want from us that we do well. We're getting something from them that they do well. That goes back to David Ricardo 200 years ago. The problem today, from our standpoint, is that we're trading roughly $1 trillion of goods and services annually with the rest of the world, and that's fine, but we're buying $500 billion, and we're just trading our assets away for those, and that is not a situation that's sustainable. I'd love to see twice the trade we're doing now, but I wouldn't like to see twice the net purchasing we're doing now. That would cause even greater problems.
Warren Buffett also has a keen social conscience that can be appreciated from Wall Street to Main Street, and he isn't afraid to express his opinions, whether it be on gambling with speculative investments, lotteries, or in a casino.
I think that gambling is a cynical attempt by the government, whatever, with national, state, local, whatever it is, to extract money from its citizenry, and it's preying on the people that are the least able to sustain more of a, call it a tax, and generally are sort of ignorant of the probabilities of it, and are really just kind of wishing their way along, and you know, the $2 they give up every week or the $5 is very important to them, and they're selling a kind of a phony hope.
Buffett will be returning almost all of his massive fortune back to society upon his death through his Buffett Foundation, which supports a number of worthy causes. He also helps charitable organizations with their auctions in creative ways. At a recent charity event, Warren Buffett offered his wallet with a stock tip included and raised over $200,000. A lunch with Buffett raised over $250,000. And a round of golf with one of the world's greatest golfers, Tiger Woods, went for over $600,000. But the best part for that lucky foursome was that it came with Warren Buffett as the caddy.
Although a multi-billionaire might seem to inhabit a very different world from the rest of us, he is equally as concerned about the larger problems of the world and shares many of our fears for the future.
The big problem in the future of the world is the fact that you've got nuclear, chemical, and biological possibilities for people that have evil intent on others to do damage that is many, many, many multiples of what they could have done 50 or 100 years ago. I mean, the number of people that are crazy, psychotic, religious fanatics, whatever in the world goes up with the population, and for a long time they couldn't do much damage, and since we entered what was then the atomic age in 1945, if they get the proper materials and they have the knowledge, and the knowledge is spreading, and they get deliverability, a relatively few people can inflict incredible damage, and that's a problem for the world. There's no question about it.
Even though labeled as the best investor of all time, Buffett hesitates to predict the future of the stock market. He invests in quality companies for the long haul and doesn't need a daily valuation from the newspaper's stock market pages to validate his investment choices or confirm his decisions. In fact, he often comments that he would not care if the stock market closed for a year or two, as he does not need a daily quote to validate his well-being.
I have no idea. I don't know what will happen in the next year in the stock market. I've never known what was going to happen next year. I think the businesses we own will do well over a long period of time, but the economy, the stock market, I don't think about them.
Buffett often discourages flipping stocks and investments and advises against paying too much attention to media reporting. He feels this distracts investors from what is truly important, focusing on the business itself. He encourages investors to ignore sensationalized headlines or fad following that can cause markets to swing in every direction.
In markets, anything can happen. I mean, it's terribly important to remember that. The U.S. market could sell for a lot less or a lot more a few years from now, and Charlie and I would not be terribly surprised. I mean, we do not know what the stock market's going to do in the United States. We never have, we never will. All we know is that it could do things that surprise the hell out of people, and so we position ourselves, or we try to position ourselves, not to profit from some forecast of what the market can do, but to protect ourselves against the kind of almost irrational things that from time to time do happen.
And as always, he is humble and easygoing in his attitude to his business decisions, both good and bad.
We made mistakes, all kinds of ways, and we'll continue to. And the beauty of it is that overall, American business does well and our businesses do pretty well, and we'll try to minimize the mistakes.
Though he is in his 70s, Buffett has no intention of retiring anytime soon, and often jokes that he'll retire 5 years after his death.
Well, I don't think he wants to be remembered. I think he wants to live forever. I think what he wants most is for Berkshire to go on and be successful, and for all the people that invested in Berkshire and believed in him to feel good about what's happened when he's not around. And I think that's way more important to him than how people really remember him specifically.
It doesn't get any better than this. I get to do what I like to do every single day with people I like doing it with. I mean, it just, I can do anything in the world financially, and I pick doing this, and why wouldn't, I'd be crazy if I was picking something that I didn't just get an enormous kick out of doing.
I think his major contribution is that you can make a lot of money, you can be very, very wealthy, and be honest and ethical at the same time. That those two things do not exist in separate realms. He has them well integrated into his character, his life, his business style, and he always has. And in that sense, he's a very important role model.
He's always told me that if he could give away all of his money today to be able to go back in time and do it all over again, just to do it all over again, he would do it because he enjoys it so much. And I think that says a lot about him.
He'd tell you that his whole life is fun. And he would tell you that every day he gets out of bed he has fun, and he feels so fortunate that he can feel that way and that he can do the things that he likes to do. And it would be hard to break it down into categories. He enjoys his friends, he enjoys his family, he enjoys his work. He gets a kick out of playing bridge on the internet these days. But I mean, I think, basically he just enjoys life, and he knows how fortunate he is that he can do that, because he'd be the first one to tell you that, most people get out of bed and they don't like what they have to do, or they spend a good part of their day not doing something that they want to do. And he knows he's fortunate that he's got a different alternative in life.
Oh, I think I'm proudest basically the way, the friends I have and the family I have. And I feel good about the people I associate with every day, and apparently they feel reasonably good about me, and it doesn't get any better than that.
It certainly doesn't get any better than being one of the wealthiest individuals on the planet and yet remaining honest, humble, and down to earth. Today, we have unveiled how Buffett got his start and how he became the person he is today. We've also uncovered some of Warren Buffett's secrets to his success, including the importance of having great role models and mentors. We've shared much of his investment philosophy and principles, which can best be paraphrased as buy ownership in great companies for good value with honest and able management, and be patient, hanging on to those investments potentially forever. I hope you've enjoyed a look behind the scenes at the life and insights of the mythical Warren Buffett Money Master. I'm Jeff Hall. Thanks for watching. See you next time.